Hi everyone! So today we are from UPSI. We're going to present to you guys accounting based on MFRS 140, which is investment property. We are going to present by John Wick, which is our group name. Okay, for the first part, I will present to you guys about introduction to MFRS 140, which is investment property. Malaysian Accounting Standard Board 2024 states the investment property defined by the Standard Para 5 as property held to a rental or for capital appreciation or both. And then investment property not for use in production or supply of good or service or for administrative purpose. And the second is not for sale in the ordinary course of business.
The subsequent measurement of investment property. Malaysia Accounting Standard Board 2024 state that FRS 140 investment property and entity is encouraged but not required to determine the fair value of investment property on the basis of a valuation by an independent valuer who holds a recognized and relevant professional qualification and has recent experience in the location and category of the investment property being valued. On paragraph FRS 140.32a state that an entity may a. choose either the fair value model or the cost model for all investment property backing liabilities that pay a return link directly to the fair value of or returns from specified asset including that investment property, and choose either the fair value model or the cost model for all investment property regardless of the choice. After initial recognition, an entity that chooses the fair value model shall measure all of its investment property at fair value. Again, all loss arising from the change in the fair value of investment property shall be recognized in profit or loss for the period.
Okay, so now for the case study. On 1 January 2015, Adil Berhad acquired the property for investment purposes. The cost of the building was 10 million ringgit Malaysia and the economic life was estimated to be 50 years. At the end of 2015, the fair value of the building was 11,500,000. The fair value on 31 December 2016 was 10,800,000. The company adopts the fair value model to account for this property. Show the journal entries.
So this is a solution. The red highlighted color is the changes of the fair value from 2015 and also 2016. So at the below is the journal entries for the solution. Let's go for the next slide. So the first adjustment at the end of 2015, the fair value of the building was 11.5 million. So firstly, we need to calculate the fair value, the difference of fair value. So the fair value building at early 2015 minus with the fair value building at the end of the 2015. You can see the tips of the calculation at the right side of the slide. So the 10 million minus 11.5 million will get the 1.5 million and also increase. Why it increase? At the right also I give you the tips. If the current year fair value is less than the next year of the fair value, the cost of a building will be the increase. So in the journal, we need to debit the investment property of the building 1,000.5 million and also credit the fair value. So for the second adjustment, the fair value on 31 December 2016 was 10.8 million. So same with the slide before. So use the fair value with at year 2015 minus at the fair value building at the 2016. Use the amount of 11.5 million minus with 10.8 million and we get the 700,000, which it decreased. Why it decreased? The tips at the right side, it said current year fair value more than next year of a fair value, so the cost of the building will be decreased. So how to record in the journal? So debit side, we put the fair value loss on investment property 700,000 and also credit side investment property building 700,000. So the creative finding that we got is the firstly recognize the fair value. So before we calculate the fair value, we need to recognize it. At the second, we need to calculate the fair value, the differences. And next, we can identify the effect of the fair value after we calculate the value, whether it increase or decrease. And also, lastly, we need to record on the journal. If it increase, debit investment property, credit fair value gain. If decrease, fair value loss on investment property, credit investment property. That's all from us. Thank you very much for watching. Subscribe.